and welcome. You're watching Countdown right here on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It has been a positive start to the new trading week. The Nifty trades around the 11,850 mark. Most sectoral indices are trading with gains. Reliance Group stocks are trading with declines. Reliance Home defaulted on principal repayment obligations, while Reliance Infra's debt instruments were downgraded by Brickwork. Automakers failed to press the pedal on the June series sales, including continuing the fall from last month. And oil marketing companies are amongst the top losers on the Nifty after Russia and Saudi Arabia agreed to extend production cuts and the subsequent rise in oil prices. Neeraj, good afternoon. So it definitely looks like a stable start to the weekend. We're holding on to those early morning gains, which is not a bad sign.
Not at all, and trending higher for the day. In fact, now the Sensex and Nifty are trading almost, at least the Sensex is trading at par with what the Bank Nifty is doing. So 0.8% for the Sensex and about 0.85 for the Bank Nifty. So good clawback and good trending day for the benchmark indices. The mid caps and small caps, the market breadth and the turnover will all come up on your screen. Not so much for the broader end of the spectrum, so that is lying flat, which is why it seems to be a bit of a reluctant rally, if you will. The market breadth still in the positive, but nowhere as close to what it was somewhere at the start of the trading day. And the turnover will come up on your screen. Cash market turnover leaves it a bit desired. Even the F&O turnover marginally off, just about 4 lakh crores. I really doubt we'll make it anywhere close to northwards of 28,000 crores on the NSE cash in the session. It just seems to be a day which is marked by low volumes. Ahead of the budget, maybe this would be the case. I'll bring up the heat map and show you what's moving and what's not very quickly. Well, there's a fair degree of green, very little red. ONGC, BPCL, so essentially the oil and gas names and some PSU stocks are coming off. The last few days, the PSE index has done very well. Today, not so. And on the gaining side, Dr. Reddy's, Tata Motors, Z Entertainment is up 3%. Quite a strong move. Bajaj Auto, HDFC, iShares. So a lot of rate sensitives doing well. And Devina, that seems to be the case because leave out Reliance, which is still up 1%. There's TCS, HDFC Bank, large caps in the green supporting the index.
Yeah, auto's taking a little bit of a drudging in today's session. The June sales numbers are not exciting to be in particular. So, I mean, you've seen Maruti looking weak in today's session. I think Ashok Leyland also has dipped in terms of his June sales.
The two-wheelers seem to be doing okay.
But the other pocket, which is the broader market space, like Neeraj highlighted, in terms of the advance decline ratio, that's converging as we step into the last 1 hour of trade. But the other stocks that one needs to keep an eye out on in today's session, Jet Airways has seen a good comeback. Remember, this out of the F&O space. It's been locked up on upper circuit of 5%. Everready is the other one. Price Waterhouse, they've resigned as their statutory auditor. They're saying they cannot justify the financial transaction of some movement of money within the companies. Then you've got Adani Power, where the board has approved the proposal of acquisition of Korba West Power Company and GMR Chhattisgarh Energy. So both these stocks doing okay. Other stocks in focus, Reliance Home Finance defaulting on the principal repayment. They've made interest repayments, but the principal repayment not happening. They have rolled back the maturity date to October 31st and rolled forward rather. And 6.24% lower is where Reliance Home Finance is. Reliance Infra, Brickwork rating is downgraded. Its bank loan lines of about 1,151 crores, and the stock's taken a drudging of about 6.5%. Other stocks on the move, Godrej Properties continues to go from strength to strength. Yet another day of strong gains for the stock. 1,056, 5.5% higher. Relaxo does well. Remember, this was one of Saurabh Mukherjee's very recent picks within the consumption-oriented space. And then you've got the likes of Deepak Nitrite, which is clawing its way back to about 305 odd levels in today's session. Volume buzzers, VA Tech Wabag, that's trading with volumes of about 14.5 lakh shares. Bombay Dyeing, Welspun Corp, heavy volumes and heavy price action. And near 52-week highs are Torrent Power, Siemens and Oberoi Realty. But what's happening in the more liquid universe? Let's go across to Agam Vakil. He's joining in with an update on the F&O space. Agam.
Well, we are looking at strength in the indices, and well, that's translating into longs as far as the futures go. So let's start off with the Nifty futures, and you are looking at about 5% increase in open interest. So there are longs there. The Nifty banking index, which is also up and about, advancing, is looking at a 6.5% increase in open interest. So there's a buying coming cross in your index futures. Your India volatility index as well, which has been hovering around 14.5 and 15 off late, again has come off to a certain extent. This isn't too much change, especially considering the kind of movements that we have been used to on the VIX over the past few months. That said, let's talk about open interest. And in terms of open interest change today, we are looking at more and more writing, as you can see on your screen, around the 12,200, 300 and 12,400 calls, and a little more writing around the 11,800 and 900 puts. So we're looking at a range, and of course that range will be established given by the open interest distribution between 11,500 on the lower end, that is your accumulation in puts, and 12,000 calls which have maximum open interest. Finally, moving on to stocks, there are a lot of them, but S-calls is one of those which are advancing in trade, and it is looking at longs. But if you leave S-calls aside, there are plenty others which are actually looking at weakness. So IGL, of course, is one of them among the city gas distribution companies which is under pressure. Jindal Steel and Power also looking at 15% increase in open interest, even as the spot declines by 3%. And we also have NCC, which is under a bit of pressure. Do remember, NCC has had a reasonably strong run of late, but there is some weakness coming in today, and 15% added in open interest towards fresh shorts. So it is fairly mixed as far as your broader markets are concerned.
All right, Agam, thanks very much for that. That is a quick F&O update coming in. But let's begin with a global voice. Margret Yang Yan of CMC Markets is joining us right now on the show. Margaret, thanks very much for taking out the time. Global markets seem to be rejoicing the fact that, you know, there could be some positive news around the trade talks between the US and China. But how short-lived do you think this could be?
Hi, good afternoon. Yes, today we saw a broad rebound in Asia equities as well as the US futures, which is up almost 1% now into a record high. And the reason, the push factor behind this is the G20 meeting, which ended up with a positive tone in which the leaders of both US and China agreed to reopen this trade negotiation. And we also see some positive catalyst of this G20 meeting, including that US, they allow some of the chip makers to resume the shipment to China's telecommunication giant Huawei. And meanwhile, China has agreed to purchase more agricultural products from the US, although the amount is undisclosed. So this set a very positive tone for the continuous talking of the trade talks between the two countries, and the market is welcoming this decision. In the meantime, the expectation for a Fed to cut interest rates by end of July still remains very high, nearly 100% as indicated by the futures market. And one more thing is the oil price. We saw today that crude oil prices advanced nearly 2% because Russia and Saudi Arabia leaders, they have reached agreement to extend the cut until the end of this year. So oil prices are boosting the energy stocks across Asia.
If we start to continue to see oil prices remain strong and move up from these levels, I'm talking about Brent crude, which is at about $66 per barrel now. If this strengthens further, do we anticipate more global equity market pressure?
Hello?
Margaret, can you hear me? Hi. Margaret, is my voice reaching you? All right. I think we've lost the line with Margaret.
Maybe, but it'll be interesting to know from Margaret if indeed she believes that, or the market believes that there could be a near-term bottom in place for crude. Seth Freeman did not think so, but if indeed the meeting is, or the comments is an indication, the OPEC plus meet is a bit of a non-event, and if indeed the market does believe that there is a temporary truce in place, which means the global war may not be as bad as the market earlier feared, then the upsides on crude maybe open up a bit. So I think it'll be very interesting to see what the belief is with regards to that. So that is the other key monitorable.
And containing supplies any which ways gives that bit of headroom for crude to go up. Yeah,
I mean, from whatever little I read or the comments that came in, till December, the agreement between OPEC plus, Russia, OPEC plus, etc., seems to be firmly in place with regards to the production. And if indeed that gets extended into another 3 months, then and demand doesn't look so bad, then who knows? There could be some sentimental upsides for crude. Already at 66, no longer at the 60 kind of levels for NYMEX, Brent and NYMEX as well. So that is other interesting.
Yeah, but for some reason, we generally tend to see equity markets for us, on the back of strength in crude oil prices. You would have anticipated a weaker equity market and a weaker currency.
Just the strength in the global markets, maybe?
That's propelling the overall sentiment boost with regards to the trade talks also, I believe.
Yeah.
So the Indian equity market's holding strong. Currency, for the Indian rupee in the morning session, we did see us above that 69 mark, but now once again at 69.03. I think Margaret is back with us. Margaret, my question to you was regards to the equation between crude and equity markets, and if we indeed anticipate crude oil prices to strengthen more from here, would that mean some amount of profit taking in the equity markets, and would you then see equity markets coming off their record highs?
Well, yes. My concern is that even though there's a broad positive sentiment driven by G20, the trade, as well as Fed cut, but this rally in global equities might be overdue, and it is starting to derail from the fundamental picture. Because on Sunday, we saw China PMI reading came below expectation and extend the second month of contraction, and a broad decline of manufacturing activities were observed across Asia, Europe, and Japan. So this fundamental picture is definitely weakening, and outlook remains very soft. And tonight we will see U.S. manufacturing PMI, which is expected to drop from the last month's reading as well. So I'm not sure if this rally is sustainable and supported by any fundamental reason. Another risk is the outlook of U.S.-China trade talk. Although they set a positive tone, but in the G20 meeting, there's lack of detail of what has been really agreed between the U.S. and China leaders, and also the key deadlock of the trade negotiations, such as the structural reform and the technology transfer. All these key issues will remain unsolved, and I think a divergence still exists between Washington and Beijing on those issues. So there might be a point of time in the future that trade tensions re-escalate and surface to be a big market interrupter. I don't know, this may happen in a month or 2 months' time or end of the year. So the trade remains a big uncertainty for equities outlook.
Margaret, what's the bet on the dollar and the dollar index? Because the dollar index was showing signs of coming off, as a result of which some EM currencies, including India, were doing reasonably okay. What is your near-term bet there?
Yep. Today we saw a big jump in the US dollar index, and that was mainly due to the weakness in euro as well as Japanese yen, because there was a broad risk-on sentiment which pushes US dollar higher, and that exert pressure over emerging market currencies. But in the mid to long-term outlook, I think dollar will still have more downside pressure given a very dovish Fed as well as the White House. So President Trump has mentioned many times that he wants to keep the dollar weak in order to make U.S. companies and exports more competitive in the global market. So now we are seeing a new wave of competitive currency depreciation among the central banks. And because of Fed, which is a dominating central bank in the world, I think the dollar will have more downside to go, even though there might be some technical rebound in the short term.
Sorry, did I hear you say that there could be some downside to gold?
Yes. I mean, in the mid to long term, the outlook for dollar remains to the downside, I think. And that is actually a good thing for emerging markets, because for emerging markets investors, we don't want to see dollar strong. That will pull capital out of Asia. And if dollar is softening, capital may flow back to Asia risk assets, sending their currencies and equities higher, so which is not necessarily a bad thing.
Right. One last question from me, Margaret, and that is, we've spoken about the equity markets, we've spoken about emerging market currencies. Let's talk about the implications of what's been happening globally on the commodities market and whether or not global commodities will start to look, as a brighter investment opportunity compared to the likes of equities, if there is anything meaningful that comes out of these trade conversations.
Well, commodity market is very broad, so we can probably divide this question into two parts. One is the energy sector, another one is the precious metal. So I think these two sectors will have very different performances in the next couple of weeks. I'm very bullish on the crude oil prices. I think technically and fundamentally, the oil prices will likely to move up further, and there are three reasons behind. First is a soft dollar outlook, which is supportive to commodities prices. The second is that OPEC and Russia, they have made an agreement to extend the production cut, and also with Iran's sanctions, which curb the oil supply in the Middle East, that's less likely to provide some support to oil prices to go up further. And last but not least, if you look at U.S. commercial oil inventory data, that data has dropped for 2 consecutive weeks by a very big amount. So it shows that the U.S. demand is picking up, especially in the summer driving season, which is seasonally a high demand season for crude oil. So all these factors adding together, I think oil will have more room to go up. On the other side, we look at precious metals like gold. I think technically gold has been overbought and is now into a consolidation or correction phase. And also because of G20, post-G20 effect, there's definitely a demand, a reduction of demand for safety. So today we saw gold price tumbling nearly 1%. And I think there would be more room to go down further for gold.
All right, Margaret, we'll leave it at that. Thank you so very much for joining us this afternoon with your thoughts. That's Margret Yan there talking about the equity markets, what's happening to the dollar index, as well as commodities in the larger scheme of things. Coming back to our markets then, and for the equity market, still holding strong, about 0.75% higher on the Nifty 50. Good 90 points gain maintained. Nifty Bank 323 points higher. That is lending support to the benchmark Nifty. Let's get you some action from the derivative space as well at the start of the July series. Tushar Mahajan of Centrum Broking is joining us in right now. Tushar, thanks very much for taking out the time. Let's first start off with the setup from the derivative space as to how we've moved into the July series from the June series.
So I think we've come in fairly strongly into the June series. The overall rollover percentages with the expiry last Thursday were higher than the usual numbers. We were almost usually about 85% of the positions get rolled in, but we saw almost 88 to 89% positions which got rolled over into July. And this is despite the fact that almost 34 stocks were going out of the FNO list last month. So I think so that was stocks. Even on the index side, I think the overall percentage was high. The only thing was that, throughout the expiry series, we didn't really see levels expand significantly with respect to the overall roll costs, which said that, while people were carrying over their positions into the next month and continuing, there was a bit of a caution as well. Overall, I think we've got a whole bunch of triggers going into the July series, starting with the first weekend, over the past weekend on the G20 summit. We've got the union budget coming up on Friday. That's going to be followed up by the earnings calendar and obviously progress of the monsoons, which is critical for the month of July. So I think given the kind of overall, factors which are going to be determining the market direction, the setup seems to be strong. Any disappointment on any of the fronts could probably look at some kind of a correction for us. For now, in terms of the overall positioning in the market, we still see 12,000 as the upside case for the market and about 11,700 as a strong region of support as of now.
Also, with regards to the bank Nifty, I mean, the month gone by has not been a bad month of sorts. I mean, it did have its ups and downs, but is it having an equally strong start in terms of rollovers that the Nifty has seen?
Yes. So, in fact, overall, the index rollovers, even on the bank Nifty side, were reasonably high compared to what we've historically seen in the last few months. So I think the underlying trend continues to be strong. Although I think in bank Nifty now what we are beginning to see is that there is probably some kind of divergence happening. Earlier the index levels was really being held by two stocks, HDFC Bank and Kotak. And I think now we are beginning to see that spread more widespread with the participation of other bank Nifty constituents like ICICI, Axis Bank and SBI also playing a pivotal part in the performance of bank Nifty. So the underlying trend at an index level on the banking index continues to be strong, and we'll probably just see some kind of a divergence there in terms of the participants pulling up the index.
And also the fact that this time around for Nifty Bank rollovers, I mean, participants were ready to pay a slightly more higher rollover cost as well. That should be a positive indicator, right?
Absolutely.
All right. In terms of various other sectors, where did we spot slightly weaker rolls compared to the slightly more pronounced rollover numbers, the stronger rollover numbers?
So I think some of the names where we did see a bit of pressure were in the larger PSU space. Not really the PSU banks, but the likes of ONGC, NTPC, Power Grid, and the public sector enterprise kind of a space. That saw a bit of a lower rollover. I think IT was the other sector which kind of saw rollovers under pressure for most part of the series, and I think in terms of the absolute rollover costs as well as in terms of the absolute rollover numbers, IT was a sector which saw a bit of a muted action. I think Reliance, in terms of headline numbers, saw slightly lower rollovers than usual, but I think that's probably more to do with the fact that there's been some kind of uncertainty around the dividend and when that's kind of going X. But broadly speaking, metals, pharma, all these stocks, consumer for that matter, saw fairly decent rollovers. And frankly, when you see like an 88-89% market-wide positions being rolled, there's really limited scope for some of the sectors to be massively lagging behind. It's just a question of shifting plus 2% to 1 and minus 5% from averages. There's not like a drastic deviation.
And you highlighted to private banks. I think from the banking space, did you see rollover leadership coming in from the private banks in particular?
So we saw HDFC Bank, ICICI, Axis as well, which rolled in fairly well. Yes Bank not as much. There was pressure in Yes Bank on the short side in terms of rolls. The cost kind of kept on coming lower, and I think for some reason Kotak Bank also, the rollovers over there did not really enthuse a lot of a lot of confidence. So on the private banks, what we saw in terms of weakness, purely from a rollover data, was Kotak Bank and Yes Bank, but the others were fairly strong. And I'll probably add SBI to that as well, despite worries around the QIP and, the fact that there's probably a potential dilution coming in. The SBI rollovers also happened reasonably well.
The other one I want to talk about is obviously Indiabulls Housing Finance. While it's been, a fairly, up and down ride for the counter, decent enough rollovers and of 87%, I believe, and it was a positive rollover cost as well, one of the highest rollover costs that we've seen taken forward.
So I think that's been the case with Indiabulls Housing Finance for a while now. Interestingly, I think the position, despite the sharp, the sharp moves and volatility in the name over the last almost over 6-8 months now, since September. I think this is not a name which has lightened up significantly in terms of positions. So it's probably the fact that positions are very concentrated, and people who hold those positions continue to believe in the story and are willing to kind of roll over those positions at whatever cost. I think Indiabull Housing, the data seems to be a bit divergent with what the price action is, and as a result I try not to read a lot into the rollover data for names like Indiabull Housing, where there is so much of divergence between the performance and the rollover data. While it works largely 95-98% of the cases, Indiabull Housing probably stands in that 2% category where obviously the stock's been all over the place with limited change on how it rolls.
Okay. Anything else, Tushar, from a stock-specific point of view that probably one should watch out for come the July series?
So I think like I said, the banks, the private banks which were not really the participating banks up until now, along with SBI, they are clearly one set of names to kind of look at. I think on the long side, the other sector which kind of really the other stock which really stood out for us in terms of rollover was L&T. While there was some kind of a worry around its dividend and all of that, but I think the stock rolled fairly well, and positions kind of got rolled in easy. Reliance was one name which seems to be suggesting some kind of pressure. I know the stock's up today, and it's rebounded well from that about 1250 odd levels, but purely from a data build-up point of view and a data centric, from a rollover kind of point of view, it seems to be suggesting that that's kind of tiring out in terms of its price action, and in case of any weakness per se in the markets for this coming series of July, Reliance could probably lead the markets on the downside.
Tushar, one question from my end. We're speaking to chartists who look at long-term charts, and there was somebody who spoke about how the PSU space is back at levels from where it started a rally almost 20 years ago. Now, it's too long a chart to look at, but when we look at what some of the PSU names have done in the recent past, it does seem that there is some buying that is coming in. Banks have been center stage, but some of the others too have seen that uptick, save for today. Anything that you are noticing which is peculiar in the derivatives side for any of the large PSU names as well?
So like I said, some of these other names, which the large PSU names like NTPC, ONGC, Power Grid, etc. From a derivative standpoint, we saw a very muted rollover action in these names. And again, they are, I won't say that these stocks are where they were 20 years ago, but obviously they have lagged in terms of performance for the broader markets over a fairly significant amount of time. So I think it seems to me, so obviously today these stocks are down because of this news about the potential disinvestment on the CPSC ETF, and this worry about supply coming in on some of these names. But I think overall public sector banks, people seem to be really tiring out of holding those positions beyond what you need to mandatorily hold to have index weightages. So, from a position point of view, the fact that they didn't get rolled over, the fact that, open interest is beginning to come in lower on the space per se, the fact that they have underperformed the broader markets, I think people are beginning to tire out of holding these positions, and that's where you're beginning to see some easing out over there.
One last question, Tushar, and we couldn't have had this conversation today without talking about what's happening to autos. In today's session, there's a bit of a dichotomy. Two-wheeler companies have done well, Maruti quite hasn't, but it's been it almost seems that when you look at the screen, it tells you that the stocks have stopped reacting to bad news. And that to a lot of people is sign of a bit of a bottom. Are you reading into that any differently?
No, not really. So I don't think that you will, trade into this sector to make a quick 10% from these current levels or 10-15% from these current levels. But I think purely from an action point of view, the stocks seem to be beginning to start trading at the bottom. I think a lot of the negative news has kind of begun to get priced in. The impending threats about electric vehicles and all of that. I think markets saying that they are still a few years away. But in terms of just selling out, let's say Maruti beyond 63, 6400, 6500 really is a base, but I'm saying 6300, 6400. I don't see too many people who see value in the fact that you would want to kind of sell out Maruti there and then look for a larger move down. I would tend to think that a lot of the auto stocks, irrespective of the fact that two-wheelers have reacted well to the numbers, are probably are getting into a zone of consolidation where the last leg of sellers would probably just sell out and long-term investors would start collecting the stocks around here. So I think the risk reward over a longish term period is skewed to the upside. Having said that, it does not mean that Maruti is going to 7,000 within this series, or the next series, or Hero Motors is going back to 3,000 or 3,200. I think the change of trend is still some time away.
Tushar, so good having you. Thanks much for taking the time out and speaking to us. It's lovely listening to you at the start of a series for how the series could shape up.
Thank you.
Well, that's Tushar Mahajan of Centrum. Speaking about how he believes the series could be like. We ended with autos. I just want to get in one's perspective fundamentally on autos before we move back to our technical experts for figuring out how the near term looks like. Sumeet Kalra is with us on a rainy day, which is not so rainy anymore. So which is a bit of a despite. Thankfully in a way. Sumeet, since you're talking about autos, we'll get to markets in a bit, but just wondering, the counters have stopped reacting too negatively to incremental bad news. Would you view this as a sign of some positivity?
I don't think so. It's more of everyone's depending on the second half to work out. So that's why the bottoms are not being crashed on even the lower estimates, like Nomura estimate being beaten by actual numbers. So even that's why I think they're not reacting on that worse off. But I think come July, August, the trend will even further slow down. And then there might be a further reaction on the downside.
You think so? Because we had Mr. Pandra saying August was the time that they'll actually start seeing a turnaround.
See, I don't want to be a little arrogant out here, but what happened in December, we were talking about the negative side, being open in autos, and everyone was optimistic about it. As per the ground data, which we see on a very regular basis, I don't see any slowdown, any upside coming up. I see a further slowdown coming up. So even if they do taxes, they might give you bounces, any government reply, but I don't see any kind of strategical move where the consumers will start buying more of auto all of a sudden. It doesn't happen that way. When you're into that dealership zone, I understand that business on that end as well. And the dealers are facing a very big pressure. That's why even OEMs, if you see, so what we track is we track the parking lots of Maruti factories. So if you see the factory in 2016 parking and today, it's almost full. So Maruti itself doesn't have a space to park any more cars. So what will they do? They'll go for even further production cuts. So I think that's why July, August onwards, it'll start to pull out down further, and that's where the hope crashes.
Because also it's a monsoon period and you might actually have delayed purchases, pushed it back towards the festive season.
See, earlier it was elections, now it comes to monsoons. But if you see, so I'll give you a small example. If you see the vehicle loans, the sectorial deployment comes up. And if you see the vehicle loan growth has come down to 5%, which was 15%, 20% when the sales were going up. Now that from 5% to going back to 15% is almost next to impossible within a month. It has to take it down fully and then come back. So I think there's still 6-9 months left where the burden comes in a big way. So I think it's more of optimism of recovery in the second half, which might burst out in August.
So which are going to be the victims of this?
I think passenger cars, especially Maruti, will be the biggest hurt down out here. And if you see on the other side, the gainer still is Bajaj Auto in my eyes. Tata Motors, because of the valuations, because of JLR issues, they already face certain valuations. So I think Tata Motors and Bajaj Auto might be more isolated in the whole system. Maruti, Hero Moto I feel will be the biggest burner on the two-wheeler side, and Maruti I think on the four-wheeler side.
Well, today the stocks are saying a completely different story, but let's wait and watch what happens in the near term. Let's talk about that too with our technical experts. Amar Singh of Angel Broking with us on the show, as is Brijesh Singh of Stock Access. Gentlemen, both of you, good afternoon. Thanks for joining in. We'll talk about autos too in a bit because that's a high-flying sector today. But Amar, firstly, the uptick that we're seeing in the markets today, you think it will continue, or does it seem like a bit of a reluctant rally?
Yeah, I would say that it is a rally, but I would say, as you rightly put it, is reluctant because for the last almost 8 to 10 trading sessions, we've seen the markets consolidate. And as I've spoken earlier also, that the overall underlying trend remains positive. Yes, the short-term trend is remaining flat, so that's the reason we are seeing this consolidation on the daily charts. But the long-term trend still remains positive and strong, so that's the reason we are seeing this consolidation and bounce back from crucial support zones of 11,650 odd levels. And however, on the upside, I would say there is a resistance around 12,000 mark. Currently, it's very close to the 11,900 mark for the cash. So there is this resistance on the upside. So I would say, and also we're having the budget on the 5th. So markets are likely to trade cautiously, but today definitely there's been a sharp up move. What I would suggest that be slightly cautious. On the upside, 12,000 is a crucial zone of resistance. And also what is very important is that on the charts, what we are seeing is that there is some consolidation on the daily charts. The weekly charts remain positive. The long-term charts are positive, but higher levels could be met with some profit booking. So one needs to be slightly cautious. As far as Bank Nifty is concerned, Bank Nifty, again, I would say that is trading similar to Nifty. It has got support coming around 31,100 levels, resistance on the upside 31,800 levels for the Bank Nifty July future series. And technically, Bank Nifty is stronger as compared to Nifty on the chart. So that's one, even if from a short-term perspective I look at, so Bank Nifty is stronger. And also if you look at the high that Bank Nifty had made recently, that seems to be 490, 31,490 it had made. So that is very close to being taken out. So I would say that Bank Nifty is stronger, but yes, high levels will be met with some profit booking. So one needs to trade slightly cautious ahead of the budget.
Okay, got that. Brijesh, does your view resonate with Amar's?
Good afternoon, Devina. See, no doubt what I have been feeling from a chart point of view that Nifty had made a low at 11,620 and now the base has been shifted on the higher side. Now what I have been looking is that 11,700 on is a base. Whereas on the higher side, 11,950 to 11,970 band would be acting as a resistance. But it looked like a 3-4 days of a pre-budget rally, and chances are that Nifty would be crossing 12,000 marks. And anyhow, from a very short-term perspective, which I have been looking till, Nifty has been trading above 11,700, keeping that thing as a stop loss. Chances are that Nifty would be making a new all-time top or say 52-week top. So keeping that thing in our mind, so what I've been feeling for the Nifty is as a very short-term trading bet is concerned, keep anything below 11,870 on a Nifty spots. If it trades, the one can look out to buy Nifty with the strict stop loss of 11,800 and play for the target of 11,970. Time frame to hold would be 2 to 3 trading session.
Okay, let's get down to individual stocks then. Amar, why don't you start off with your list?
Yeah, the first one to look at is Reliance. Reliance Industries. What we are seeing in Reliance Industries is that Reliance continues to trade firm on the long-term charts. Short-term charts, we are seeing some consolidation in Reliance, but Reliance has a very strong support around these levels, 1240, 1250 odd levels. Currently, it's around 1268. It's in oversold territory as well and close to very crucial support zone. So there is a possibility that the stock could bounce back. So any pullback towards 1255, 1260 ideally can be looked as a buying opportunity with a stop loss of 1224 and a target of 1324 in the short term. The second stock to look at is HDFC Limited. If you look at HDFC Limited, the stock is very strong on the long-term charts or the intermediate term trend. For the last few trading sessions, I would say roughly around since the start of June, the stock was consolidating. So between 2230 on the upside and 2130 on the upside. So now that resistance has been taken out today. And there's a possibility that the stock could rally because this is breaking out of a consolidation zone. And also we witnessed extreme delivery quantity on 21st June. So there was this, and then again it bounced back from those levels itself. So this stock is one can look at. So any pullback in the stock towards 22.10, 22.20 ideally can be a buying opportunity with a stop loss of 2175 and a target of 2295. And the third stock to look at is Berger Paints. That's the third one. This is also one stock I would say continues to remain positive on the charts, on the long-term charts. But long-term charts we are seeing some consolidation in the stock. But still on the short-term charts, the stock has moved out of a consolidation zone. So this is the third one can look at. So Berger Paints buying around 315, 318 with a stop loss of 309 and a target of 334 in the short term.
Okay. So that's 3 stocks there that Amar Singh likes from a trading standpoint. Brijesh, what about you?
Devina, I have 2 buy calls. The first is from a realty sector, that is over a reality. As a disclosure, we have recommended to our client on a lower level. Right now, the stock has been quoting somewhere around 615 zone. So on a daily chart, the stock had made a W pattern, which generally in the technical we say that the chances are on the stock would be shooting up to the higher side. Whereas we check it out on the weekly chart, the stock had made a cup and handle pattern. Again, it's a bullish formation. So presently for a very short term time has been concerned that present rate can be used for accumulation purpose with a strict stop loss of 595. Look for the target of 660. But if someone has a view for a 6 month to a 9 month time frame, then purely from a technical point of view, since it has formed a cup and handle pattern, it is giving a target of 700 followed by 850. Here your stop loss would be deeper, somewhere around 550 on the closing basis. The second call which I have been looking is Avenue Super Smart. The stock on the hourly chart as well as on the shorter term time frame of the chart, it has made the higher lows formation, which is giving a bullish sign. So if it trades somewhere around 1430, one can look out to buy with 1420, then or say 1425 in this range. If it trades, then one can look out to buy with a strict stop loss of 1390 and play for the target of 1460.
Okay. Those are some stock recommendations. Avenue Supermarts being one from Brijesh stable, and the stock in today's session is doing pretty okay as of now. Let's get down to a few other stocks that are moving within the broader market space. So while the benchmark indices are holding tight about 0.75% higher, for the mid caps and the small caps, we've got some gains too. Individual counters thereof, Adani Power seems a big spike of 15% now. So this is is putting up a great show. VA Tech Wabag, we spoke about this one, 1.4 million shares have been traded. Bombay Dyeing is up about 7%. Godrej Properties, 1,059. This is a record, it's going to be a record close for the counter. Escorts is doing well, about 5.5% higher. And then you've got the comeback of Manpasand Beverages. And interestingly, the stock in the last 7 days has been up 40%. On a daily basis, it's been locked up in upper circuit. This was the exact opposite of the stock price move when those arrests of senior managements happened. And on a daily basis, it was a lower circuit with no exit opportunities. And that's completely reversed itself over the last 7 days. Samir, any of these names? Godrej Properties for one. 1% beverage, obviously there's no entry point here, but there's sudden interest in the stock that's pushing it up.
So I think if you see all of them, Godrej Properties, especially after the QIP, I think it's a hold over there because the valuations now have really stretched, and it keeps on proving that the valuations are stretching further and further rather than correcting or giving you the space to re-enter at a dip. So I think whoever has it can hold on to it. I think the other one was Bombay Dyeing. Bombay Dyeing, what is happening that they used to do the sales through the subsidiary of the island ICC towers which were there in Dadar. So now they're planning to merge that with the parent company. So that will give it a kick up in the valuations. So I think 130, 140 shouldn't be that far for this stock. So I think these two stocks are better off rather than Adani Power or Manpasand.
Okay, you're not convinced about Adani Power?
Adani Power, see again what's
After
happening.
the approval for those 2 power projects?
But yeah, they need to raise money for that, right? Again, your debt burden keeps on coming on to you, and you have been aggressive in the acquisitions, whether it was Bombay or these acquisitions. And now, when even a new trigger has come in where the LCs will be provided by the buyers of power, right? So that will help them, but I don't see any fundamental changes on the numbers to support these kind of upswings. So these can be technical upswings or more of short-term buying, but on the long term and giving my investments to them, there has to be some movement on the quarterly numbers at least to show that kind of a base.
Okay, got that. Brijesh, want to come to you with Adani Power though, after today's 14% move?
See, Devin, at today's session, we have seen stock making a 52-week high also, and it's been trading near that level. And the main point is the volume. So volume has been increased, so it indicates still the momentum for the shorter term would be continuing. Now the next resistance on the higher side is that the stock has been trading above 55, keeping that thing as a stop loss. And the present rate is somewhere around 59. So if it trades somewhere around 57 to 58, one can look out to buy with a strict stop loss of 55. Play for the target of 62.5 to 63 as a first resistance. Anything on the closing basis of 63, stock can jump to the level of 68 in a shorter term time frame. So 55 is a crucial level which should be kept in mind for a swing based trading has been concerned.
Okay. The other one is Igarshi Motors. The stock's up 55% in the last 7 days, though still on a 6-month basis, it's down 50%. 1-year basis is down 60%, sorry, 1-year basis is down about 53 odd percent. But the last 7 days have been phenomenal for this counter. Sumeet, what's happening here?
So I think Auto Ank and at 600, 650, the Japanese took over the company and they gave an open offer around 800, 850. That's the time we gave up the company and we sold off whatever the stake we had. And after that, it got transferred to the Indian promoter. So the company does into electric motors for the windows. So the electric motors, windows, they have around 80% of market share over there. So the company is good, product is good, but the promoter change and that kind of valuation which it went to the Indian promoter, that created a kind of a skeptical nature in the transaction. So that's where it started falling from the 600 or 650 levels to 180, 170. And I think over there was a volume and there was an uptick in last 5 years. But I think it's a bounce, and till the time the numbers don't improve, I don't see any revival.
So dependent on the numbers would be the verdict on Igarshi Motors. Actually, with the autos, the auto ancillaries, it'll be interesting to see what happens to some of these companies as well. Well, let's wait and watch. Igarshi is certainly a stock in focus. Today, some of the other companies might also have done well. The auto ancillaries, because the auto pack by and large is doing rather okay for itself. Let's move on to corporate conversations as well. IIFL has initiated coverage on 8G Infra, expecting projects like Bharatmala to contribute to the company's growth going ahead. Let's discuss all of this with Harendra Singh, the managing director of the company, joins us right now on the show. Good having you, Mr. Singh. Thanks so much for joining in. The street seems to be bullish on your capabilities to capitalize on highway spends, Bharatmala projects and some others. What has been the recent spate of order inflow into the company, into the road projects, and how do you expect FY20 as a year to be like?
See, at the start of this year, we were having 6,200 of unexecuted orders, and during the current year, we are expecting some 4,000 crores of new orders to be there. And this year, as last year and before last year, which we had done almost 30% growth, we are expecting the same during the year.
30% growth in execution or 30% growth in order book?
In execution, not in order book. In order book, obviously, somewhere or the other, right now we are sitting at about 3.1 order to this execution, and we are expecting this ratio can be maintained 3 to 3.5.
Okay. Are the recent spate of orders coming in at better IRRs, Mr. Singh, or it is similar to what it used to be?
No, it's not that better, but the range has a bit improvement is there because of the size of the project and the EPC margins where we are looking into, it has been somewhere or the other we are looking into 1 to 2% additional margins. Like earlier, it was not there.
Okay. No, so are you saying that because of the higher percentage of EPC, your margins will improve?
Yeah.
Okay, which is at 71% currently, I believe. HAM is 29 and EPC is 71. Is this mix also likely to change, Mr. Singh?
No, with more of EPC or HAM, HAM again is about 50% of the projects, and then EPC remaining part of it, and BOT toll as well. We expect that our order size would be somewhere 70 to 30, 70 of EPC and 30 of HAM project.
Okay, which is pretty similar to what it exists right now, and I believe that's the same percentage between private contracts and government contracts as well, 30-70.
Yeah, quite right.
And that is what it will stay like.
It would be in the coming years as well. It would be the same.
It would remain the same. Okay. When I look at the growth in the order book from FY16 to FY19, it clearly shows a dramatic improvement from 1,500 odd crores in FY16 to the order book of about 6,200 odd crores right now. You mentioned 30% execution. 30% growth in order book would mean you would end FY20 with an existing order book of what, 7,500?
We are expecting somewhere 8,000.
8,000 crores of order book after the 30% growth in revenues for FY20.
Quite right, quite right.
Okay. How is the debt equity situation for you, Mr. Singh?
Debt equity as of now, it is at the year end, it was 0.4. And going further, we are targeting to reduce our debt by 100 crore odd. So it would be somewhere 0.25%, 0.25 to 86.
Okay, and one final question, Mr. Singh. Your the kind of growth that you're seeing in FY20 would largely be a result of the government's focused on road infrastructure. Are you trying to kind of bifurcate or diversify from the dependence on government road projects into other factors as well? You have 30% private order book, but are you trying to diversify that?
Yeah, we had earlier executed some water supply project as well, and we recently has bagged one project of 200 crores for airport development. Going ahead, we are looking that as of now it is 95% of the orders are from highways. We are looking somewhere 10 to 15% orders we are targeting for sector like water supply, sewage, also railways or airport development.
Okay, Mr. Singh, we'll leave it at that. All the best with FY20 as well. Thanks so much for taking the time out and speaking to us. I mean, I don't know if you got to hear everything that he said, but well, the commentary seems to be pretty bullish, not just from HG Infra, but from a bunch of other infra companies. Book to bill is solid. Margins are looking strong. Execution, 20 to 30% seems to be the nature of the day. Debt equity is not a problem. Everything is going right. There shouldn't be difficult to make money here then.
Yeah, but what happens when you sell the book from 1,500 to 6,000 crore, right? Your book to bill ratio goes to 30%. Now when that 30% has to go to 40, 45 and your book is growing bigger, then your book stress, how balance sheet stress you manage, that's where the individual is more important, I think. That's where the management becomes more important than others. If you see certain infra companies, if you rewind them back to 5 years ago, they were optimistic on the infra spend and everything, right? But in that case, a lot of balance sheets got stretched along with the order book. So I think now next 5 years, it'll become very difficult for everyone to grow as much as they have grown in past 5 years on the same balance sheet. So it'll be very selective people who are able to manage through that. And there might be even maybe a foreign support or private equities coming into play via them rather than, because see, even if the minister who's running the whole scenario says that banking funding will become difficult for you, so you better find out scenarios what you have to do. So right now what they are doing is the previous work which they have completed is running their balance sheet. Now if they have to sell it to build the new one, that becomes a difficult pressure on the balance sheet. So I think there's this company called PNC Infratech, which we like and which we have kept under a watch. We've taken a small investment over there. But I think over there they specialize into airport runways. So over there, that is the specialization which they have.
You're talking about PNC Infra.
PNC Infra. So that gives us comfort that, even the management is very selective in what they are trying to build out. The balance sheets are still very normal. So even if they are growing 2 times from here, their balance sheet can handle that kind of a debt. So that's where you try to make money. Who's already into that leveraged balance sheet, even a 50% kind of a growth will create a stress of at least 40 to 50% of balance sheet stress. So I think it's very selective now.
Okay. What's working for Voltas? I mean, it seems to be the outlier in the pack. They're doing well. And Havells too, for that matter. In the last 1 year, it's returned 45%. And if Havells has returned 45%, is the trajectory for Polycab similar?
So I think Havells now you can't compare it to any, let's say, electrical company, because Havells now, if you divide it into Lloyd's Consumers and Havells, Havells' core business is still suffering in terms of balance sheet and P&L, and they are finding it difficult to manage because the B2B business over there is getting a big strain. If you see the Lloyd's Consumer, that is supporting the Havells valuation at a very large extent now, at least on quarterly numbers. On the Voltas side, they have a lot of capacity empty right now, and North is the major shareholding of Voltas in market share terms. So they are able to manage and capitalize over there, and they have done they have entered the cooler side as well this summer. So that is helping out the kind of a run-up which you see in Voltas as compared to a Blue Star or anything.
Okay. On the charts though, Brijesh, if a Voltas, a Havells.
The Voltas in today's session, they've made a 52-week high and consistently has been moving up with higher tops and higher bottom formation. Now the recent swing low of 635 or 640 for a swing-based trading has been concerned. That should be the support on the closing basis. If anyhow that thing breaks, then the more important level to watch would be 610. Whereas on the higher side has been concerned, right now at this point of time, I would be avoiding because the risk exposure is not in the favor. Because the rally has started below from a level of 600 and has been moving up. So if it trades somewhere around 640 to 645 with keeping a stop loss of 625, one can look out to buy and play for a target of 685 to 690 for a very short term has been concerned. Regarding with the Havells has been concerned, the same chart pattern has been there on a daily as well as weekly. Right now at 790 would be avoiding, but no doubt since the stock has been trading in a bullish formation, but somewhere around 775 to 780 if it trades, then one can take a buy call in it with the stop loss of 755 and play for the target of 800 followed by 820.
And Amar, just one question on the stock of the afternoon, I would reckon. Trading at life highs yet again is Godrej Properties, 1075 post QIP, very strong move around the high point of the day. What does one do here?
Yeah, I would say that Godrej Properties continues to remain extremely strong on various time frames, and also the stock, if you look at it for the last almost 4-5 trading sessions, it was consolidating and it was unable to breach the 1000 mark, and then it closed above those levels for the last 2 consecutive days. And today there's been a very sharp rally, and also if you look at on Thursday, it had witnessed extremely high delivery quantity. So clearly reflecting that there is confidence in the stock even at these levels, and technically also the stock is not showing any signs of I would say bearish divergence even on the short-term chart. So those who are long, they should definitely hold on to their position. Now the stock has got now very strong support coming at around 970, 980 levels. So ideally one can hold with the stop loss below those levels, and the upside target from the current levels is towards 1140, 1150 levels.
We'll let you go. Your thoughts? Maybe you spoke about real estate already. But no, my question is largely that if you avoid or if you don't get into a Godrej or an Oberoi, is there something else? Because Bangalore players now have that overhang of whether they'll be permission or not. I'm sure there will not be any event like that, but they have this overhang. DLF its own overhang. Is there anything beyond Godrej or Oberoi that one can buy?
So I think I'll stick to both of them only.
Okay,
and I'll prefer Oberoi because I don't see that kind of valuations right now in Oberoi what Godrej property is running with. And I think a couple of new projects are still yet to come into the books. So I think Oberoi is a better place right now.
Okay, we'll leave it at that, Sumeet. Thanks so much for taking the time out and being with us. Rock solid for some real estate names. We slip into a break. Let's hear out as we slip into the break why Krishna Bhimani of Invesco thinks the budget may leave the markets dissatisfied rather than exciting it.
Well, so the budget is somewhat less relevant. It's really more about the policy impetus that the new government has, and there are two things that they need to do. First, in the near term, finding a way of solving this liquidity crunch that is going through in India is absolutely critical. Effectively, if they don't do anything on this front, the likelihood that growth falls off even further, I think, increases meaningfully. And this is something that they can address pretty easily if they want to. And the second thing, of course, is from a longer-term perspective, the structural reforms that need to be unfolded for the India to get to its manifest destiny, recognizing that there's no natural way to get there. They have to actually do a whole lot of hard work in terms of facilitating capital deployment.
There is also a serious farm sector crisis in this country, accentuated by a water crisis. There is a jobs problem. Do you anticipate this budget to be focused on the farm sector? Many people are talking about a possibility of a stimulus. Is there a case for one?
Well, so there are 2 points in that regard. First, I think the farm economy from a political standpoint, especially after this sort of a mandate, is absolutely critical. So I think they want to do that. But the problem is the fiscal flexibility that they need to be able to do that is just missing. You know, fiscal deficit is too high to begin with. They may get a boon from the money coming from the Reserve Bank, but I think it would be misuse of resources for them to be deployed for this particular purpose. So they will do something. They will do something marginal, I hope, and not go overboard in terms of widening the fiscal deficit. That would be a challenge from a long-term perspective.
On the question of fiscal deficit, you know, if there is obviously the need of the hour, do you think Prime Minister Modi and this government will perhaps sacrifice fiscal prudence for the sake of fixing these problems in the near term? Where is the additional money going to come from? Where is the government going to mobilize additional resources?
Well, so that at the end of the day is the biggest challenge for India and its the long-term growth story. It's about mobilization of resources, and that challenge is not going to go away anytime soon. So if you look at the fiscal deficit situation today, incorporating off-balance sheet borrowing, it's going to
delayed payments.
Yeah, you know, it's really high. Having said that, I think in the global interest rate environment, people may be forgiving of some of it, but I think an excessively wide fiscal deficit probably would be quite punitive. So again, the incremental steps that they are going to take, they have to take for political reasons, but they will be incremental rather than substantial.
What can the market be excited by in this budget?
Well, again, I don't think there's going to be a lot that the markets are going to get excited about in the budget. I think there's a lot that can happen that can get the market dissatisfied with the budget. And I think that's probably more likely than creating excitement.
How are you positioned ahead of the budget here in India? Would you be buying India right now? Which sectors look attractive to you?
Well, so here's what the challenge is. You know, Indian markets are very expensive, and especially the markets that you want to buy, the consumer story, for example. It is probably the most expensive market anywhere in emerging markets, because that's where people arrive when they get invested in India. But from our perspective, we are really far more focused on specific companies rather than specific sectors. So even in a beat-up sector like bank and finance, we think we can find a good sector or good company that we think will do well. Those are the things that we focus on rather than just making a generic sector bet in the market.
We've been speaking about what the government needs to be doing. What do you think the finance minister should stay away from? What do you think she should not do in this budget?
Well, so the temptation would be to widen the fiscal deficit in a meaningful way. You know, recognize that while the markets may be somewhat forgiving, I think if you go overboard with that, that would be really a problematic situation. That would be a problematic situation from a long-term credibility standpoint. So maintaining some level of financial prudence, you know, if you count the off-balance sheet borrowings of the government entities and state, you know, but the fiscal deficit in India is quite wide on an aggregate basis. Widening it meaningfully to get political goals accomplished, I think would be a mistake from a long-term perspective.